Welcome to PeakTV. I'm Nic Lim, Executive Director of Peak Asset Management, and we've got Nic Lim and Nick Gonios here from 8Common. Guys, thanks very much for joining us.
Thanks for having us.
Tell us a little bit more about the business and what it is that you actually do.
So 8Common is in the business of enterprise software. We focus on making happier employees as much as we can in the workforce, and under an area on productivity and performance is our space. We have take software products and we take them into the cloud under a model called software as a service. And we have many customers that have been with many years executing under that model.
And what it is that you do, what's your big point of difference, Nick?
I think for us is that we've had clients over a long period of time who have been traditionally on an annual payment scheme with us. So the products have been around for about 15 to 20 years. And right now we're transitioning them quite successfully to go into monthly payments on a platform and per transaction fees. And what's happened is that we've seen a strong growth in revenue, a strong take-up of clients who are existing, moving on to the new platform. Some of the first clients who've gone to the new platform includes clients like Woolworths, who have already been a strong long-term client of a business, and now moved on to a new structure, a new product, and they've been very happy with it.
And you've obviously got a great business model in terms of a SaaS business model. Tell us a little bit about your revenues and obviously the growth of the business since you've been IPO'd in the last 2 years.
Mm-hmm. So our revenues come from traditionally from license and maintenance, but we've quickly been transitioning to recurring revenue streams. Our overall transformation of the businesses that we have gone from that old license and maintenance model to recurring revenue streams based on platform fees and transaction usage. In addition to that, what we're doing is committing to long-term contractual arrangements with our enterprise and government customers, which gives us a lot of headwind in terms of our forecasted revenues going forward on a multi-year basis. And we will continue to drive that strategy going forward with a strong focus on 2 or 3 key verticals. And that gives us an opportunity to really stay focused on execution as we start to drive for growth.
So traditionally the business has been 81% recurring revenue base, and that continues this day as well. What terming out the agreements does is that we can then now forecast 2 to 3 years ahead. And that's a very powerful feature.
And it was only a few weeks ago or last week that you actually announced that the Department of Education actually went live. What does it actually mean for 8Common? And look, it's a very competitive landscape. Tell us who your competitors are in the space, what makes you different, and why you actually won it, and how that revenue breakdown actually works.
I mean, certainly when you want to invest in a business and a software business, you need to invest in a product leader, and that's where we're at. We're product leaders in the products. And Nick can share with you more about the Department of Education tender whole process.
So the Department of Education for us was a pretty material sized deal for us, which actually enables us to go to the next level as part of our growth. How did that come about? Was basically we were invited to a tender, and as part of that tender process, we were aware of the fact that we were part of 20 other organisations that were contenders for the same piece of business. Department of Education across the country, or New South Wales, is one of the biggest operators in the country with over 100,000 employees across the entity, and for us it's material big win. Because of that, there were 20 large organisations participating in, competitors of the like of the Oracles and the Concurs and similar organisations, large, medium and small, and we ultimately got to be the winner of that contract and tender. And took us quite a few months to get to the point of going live with them. And as part of that process, we're extremely happy, and they're extremely happy to the point where they are very strong advocates of what we're doing. In addition to that, we had many other government departments that are observing that project at the moment that has gone live. And we have many more wins that we hope to be announcing sometime down the track.
And from a revenue perspective, I mean, how's that contract actually broken down? Can you just take us a little bit more about the revenue structures and how you actually make money out of it?
Sorry, the revenue structures are based on very simple. So first and foremost, we're a product-centric company. Mm-hmm. Everything that we're doing is around the productization of what we're driving for. So we're not driven by implementation services as a revenue stream. We're driven by product usage of it as a core revenue stream. So when we're going in and deploying our implementations, we're talking minimal implementation efforts, a few weeks. And with that comes us to be able to be very agile in terms of driving that, onboarding successfully, and then driving for product usage as a revenue stream. The revenue streams are driven by platform fees and transaction revenue streams based on the number of expenses that our customers are actually driving within their organisation.
So what's the contract actually worth, give or take, to 8Common?
For that materially, that one,
Yeah.
we're talking 7 figures.
Okay.
7 figures over a 5-year life horizon, and that's at least what we've announced to the market at this stage. We're aware that the opportunity is a lot bigger and wider, and that there are many more of those similar type of deals to come.
And there's obviously great opportunities to cross-sell the products and services within the format and expense aid management. Tell us a little bit about the sort of the opportunities and really the catalyst for the stock going forward in the next 3 to 6 months.
So when you look at the business that we're building and the group that we're building around the space around productivity and performance for our employees and stakeholders, there are very specific areas of opportunities for us to continue to build on. With the basic customers that we have, that we continue to add, that are long-standing customers already, and many new ones, blue chip and large government entities. It provides us with a platform to drive additional revenue streams through brand new products and existing products that we have, ultimately leveraging that as we grow. How will we go about doing that is by adding and building a larger growth focused team, which we have started doing and continue to grow going forward. And we want to become the industry leader in that space going forward. When we talk about enterprise SaaS, around productivity performance, you think of 8Common.
Sure. And so going back to the revenues and the catalyst for the stock, $2.7 million in revenue sort of 2 years ago, 3.2, estimated close to, give or take around that $4 million level. Where do you see the business in 3 to 5 years? What does 8Common actually look like, and why should we be buying the stock right now?
So as long as there's clarity that our products are market leaders in the business, the kind of appetite and uptake expectation in the next 5 years is very, very strong. Now, are we talking here about a 10%, 20%, 30% increase in terms of uptake and timeline? No. There's going to be a much, much bigger swell of take-up for the business. And as long as we position ourselves with an existing client base, with champions as we're ambassadors of our products, we think we can be in a great position. So the 3 key signals that we look for is, number 1, existing clients going onto the new platform. That's a clear win. New clients going onto the new platform. And third, us talking about the number of transactions and the activity volume that's going through our system, which also translates to revenue. So in terms of a revenue picture here, our visibility towards going to 5 million, 10 million is very clear, because it's always driven by, as long as you're in, you are the platform provider, we are clear that transaction volumes are going to go up.
Clearly, a 3 to 5 year horizon for us also presents international expansion as well over time, and we're creating beachhead's position up into Asia right now for that, and we'll continue to do that. So you should expect to see that. Having said that, we have offices already in Singapore and Kuala Lumpur as we're expanding as it is, and we will continue to build across the board going forward in terms of the north of our horizon.
Nick and Nick, thanks very much for coming.
Thank you, Niv.
Thanks.